The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners out there are faring well during these bull markets we've been having for the past week or so. My name is Mark Longo from theoptionsinsider.com, as well as many of the programs here on the old Options Insider Radio Network. And I am joined today on the Option Block All-Star panel by a motley crew of fellows, starting off with a returning regular, good old Tim Navabi, holding down the Options Express hot seat. Mr. T-Nav, welcome back to the show, sir.
Thank you very much. I appreciate it. I always enjoyed being on the show. I was looking forward to this day. I know John was doing it, and then Rob had the last one. So what a day today. Very, very busy.
Yeah,
very busy.
Some stuff going on today. Some stuff to talk about. That's always fun. I'm trying to think now. You may have the appearance record down for the OX hot seat. I'll have to check my logs.
Really?
But I think you might have done the most now of you and Rob and John and the once in a while Alex.
Right.
I think you may have the record. I'll have to check.
All right.
Also, another erstwhile regular, sure to be making more appearances down the road, is Mr. Andrew Giovinazzi of Acumen fame. Andrew, welcome back to the show, sir.
Thank you, Mark. It's good to be back. I enjoy being on the show.
I'm glad to hear it. You can hear the enthusiasm dripping from your voice.
Dripping, 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 like the juice coming out of the market today. Dripping, dripping, dripping.
There we go. A fine analogy for today's activity. And we have a newcomer filling in, I guess you can call it the KYO hot seat these days, because we all know Uncle Mike has other issues to deal with, and Auntie/Monday Mike has been called away on urgent business, even though he wanted us to call him Monday Mike, and he wanted to sometimes do the Thursday shows as well. So we have a able stand-in in the form of George Kachuk. George, welcome to the program, sir.
Hey, thank you. It's great, an honor to be here with all you option specialists. So it's great to be here.
You're the man holding down, I suppose you can call it, the equity/macro general desk down at KYO these days, right?
Yeah, pretty much so. I kind of look at market direction, timing, market direction models. We use that, and we actually select individual stocks and, run equity portfolios.
Good to know, because everyone thinks of KYO as just covered calls and protective puts, but there's a wee bit more to it than that.
Yeah, I'm the oddball in the group. It's like, and they do all the option talk, and I listen to your radio show, and I'm going, someday I'm going to learn those things. But I do pretty much the shares in the market.
Well, we'll do our best to educate you here on the program today. All right, and with the team assembled, we're going to dive right into the trading block.
The trading block.
And welcome to the trading block. This is, of course, the portion of the show where we discuss what's been trading, what's been moving the markets. And as Mr. T now alluded to, there was a good deal of movement and trading going on today. It was yet another day of upside rally. The bulls are back in force. The bears have been beaten back, at least for the time being. We saw strong rallies across the board of 3% or more in all the major indices. S&P up about 43 handles to 1284. Good old Dow up about 340 to 12208. And the NASDAQ, the tech leader, up about 3.5% or almost 90 handles to 2738. And commensurately, the old VIX cash, as Andrew alluded to, is letting the juice out today, down about 4.5 handles or nearly 15% to about 25.5. And I think that will be welcome news to a lot of people who have been leaning to the downside in VIX for quite a long time. I know most of the players I know who've been leaning short VIX have been doing so at least since the debt debacle, if not a little earlier than that. And so they've been rolling for many months, hoping that the VIX would finally make its way back down into the sub 30 and maybe sub 25 range. And we're finally starting to test those waters there these days. So Andrew, were you one of these, I guess you can call them optimists / VIX pessimists that was leaning heavy to the downside in VIX? Are you cheering and dancing today?
I am cheering and dancing today, actually. It's sort of my biggest problem is I don't trust those Europeans. You know, that's the problem.
Does anyone really trust Europeans, particularly those Greeks? You can't trust the Greeks.
I don't trust them, but the collapse was pretty solid. I think a lot of people, you're right, were waiting for that. So I personally, I was happy today.
I'm always leery when I hear almost ubiquitous trade recommendations across the board. It reminds me of back in the bubble days when everyone and their mother told me to buy on the floor, said, got to buy Lucent below 60. That's the deal of a century. Or you have to hit these Enron puts with Enron below 20. These 20 puts are the sale of a century. And I started hearing similar broad across the spectrum recommendations going into the debt debacle of you got to load up on VIX downside here. This is the no-brainer. VIX, of course, is going to retrace below 25 after this deal is struck. And of course, subsequent to that announcement, we saw the debt downgrade and all of the conflagration in Europe, and the VIX just looked north and never looked back. And quite a few people were left holding the bag there and rolling and rolling and rolling, hoping for an eventual retracement. And those few who have been stalwarts and have stuck to their guns and haven't switched to the upside of finally being rewarded, and maybe they can make back some of those losses they've incurred over the past few months. I was leaning that way as well. I was thinking VIX is going to retrace, but I was scared off from putting on any bets to the downside, just because it was so universal across the board that always makes me hesitant to be yet another man jumping on that train. And looks like if you held on to it for 3 months or so, you fared all right, but you had some carrying costs in the meantime. And of course, as we alluded to, the bulk of today's rally was due to the, I guess you can call it, lessening of concerns, or the celebration, or the end, perhaps, of the conflagration in Europe, as the European leaders agreed to extend their bailout fund to many of the other countries, and essentially also write down about half of the debt in Greece. So looks like Europe may be on the mend finally. George, is that your impression as well from watching all the action today?
Pretty much so, but I'll be honest with you. I try to kind of ignore all the news out of Europe, although it does really hit our markets pretty hard. I kind of try to pretty much just focus on the price and volume action. It's been pretty much supportive leading up to this point. So this Europe thing kind of gave it a little bit of kick. Now, of course, at any point here, this Europe thing could derail us, but I'd say ignore that news right now, because just going over the last few weeks, the price volume action on the general indices and the individual markets is pretty strong, and the sentiment is still very negative. No one's really believing it, and that's pretty good. Maybe after today that may change a little while, but so I see it as very positive with the negative sentiment and the market moving forward and good price volume action. And a lot of leading stocks are kind of setting up in some pretty constructive action. So you got to be leaning that way to the upside a little bit.
And of course, we discussed VIX coming off, as you would expect, in a rally today, but you still get to look at the VIX in context of where the S&P is on a day like today. And the last time we were up in these ranges, the VIX was substantially lower than when we were up in the 1280 range or so in the S&P. The VIX was substantially lower than where it is right now. So if you look at it in just a pure contextual term, VIX is still substantially elevated, and the market it seems as a whole, at least the volatility spectrum of it is not buying into this rally either. So it sounds like they're still, yeah, exactly.
I think, if you have kind of a stiff stomach, I think the implied volatilities overall are a lot higher. And if we kind of keep going up like this, maybe we'll get a big sap out of that. So maybe this November juice will be it might be an opportunity here. That's all I'm saying without jumping off the cliff too far. I think it's
by all means, jump, sir.
Hey, Mark, I just wanted to agree with what George was saying, that, it just seemed that for the last few months, the sellers really got exhausted, I think. And, every time they get excited, there was no follow through. And I think they just weren't around, and I think that's really what kind of led to today. Like, some of the news in Europe, of course, really adds that extra bit there. But at the same time, they just weren't around, and they haven't been around, and they've just been exhausted since, I think, August. So that's kind of what I saw, happen today, was just people not, no more sellers around me, who's short, somebody who's short is either out of the market or just really, taking a lot of pain right here.
I guess we need to go to our general sentiment indicator. What does Mr. Grigas have on right now? That's the one I like to know, because then if he's finally gone long again, then we know the shorts are done for the time being. He's a degenerate short whenever possible. That man cannot buy a rally. Yeah, he does not buy into any pops. So if he's gone long now too, then we know perhaps it is time to go to the dark side yet again.
Right. I don't know. I haven't heard what he's doing.
Is he cursing down the hall in his cubicle there? Then he's short again.
He looks pretty happy. So
maybe he finally bought some upside for a change. And of course, it was just a generally strong economic day across the board. We saw the economy growing about 2.5%, which was better than expected. Consumer confidence strongest since Q4 of last year. So all that really helping to boost the market as well. Also, so far at least, it's been a very, very strong earnings season. More than half of the companies in the S&P 500 have already reported, and about 75% of them have beaten the mean analyst estimate. What we think of analysts on this show, but yet that is a fairly decent barometer that things may be looking up on the corporate front. Is that the same data you've been tracking over there, George, since you are the trend man?
Well, yeah, and pretty much, and here's the interesting thing too, if I may add into that. Everyone's always talking about, this market's only really been driven by, QE1, QE2, we're going to get QE3, and now we're actually getting a QE out of Europe. And that's partially true. However, though, if that was totally true, we'd see PE values exploding, getting really high. In fact, they've been shrinking. I mean, and now I'm not a value guy at all, and this kind of drives me crazy, but on a valuation basis, the market's dirt cheap. I mean, it's really cheap. And if we throw in what interest rates are, and they're going to be low forever, it's like unbelievably cheap on a historical basis. So, and corporate profits are stronger than ever. Of course, you still have that unemployment thing hanging in there. So you kind of got to lean to the upside, but of course you want the market on your back, and finally we're getting that over these last few weeks.
So generally, overall, are you feeling? Are you buying into this rally personally, George? Or are you thinking this is kind of a bit of maybe a longer dead cat bounce before we turn to the dark side again?
No, I'm scaling in. I started scaling in about 2 weeks ago, and every day I've just kind of been adding in a little bit, And what I mean by looks constructive, we'll get some pullbacks. Generally, the volume has been less if I look at the general indices, and especially some of the leading stocks. So I keep scaling in, But of course, I hate to stay in the market if it turns south on me, so I'll be the first guy getting out.
Well, that's where the KYO boys come in when they collar all that stuff for you, so you don't have to worry as much to the downside.
Yeah, they keep yelling at me, do some of those collars, do some straddles and all that other option talk you guys do. I won't even pretend I know what it is.
All that option talk. Well, speaking of option talk, I think it's time to close out the old trading block and roll right into the odd block.
The odd block.
All right, and welcome to the Odd Block. This is, of course, the portion of the show where we discuss the interesting and or the unusual options activity that's been lighting up the tape these days. We're going to kick things off with a newcomer to the Odd Block. It's Avon Products, Inc., ticker symbol AVP. Not exactly a banner day for AVP. They closed at $18.81, down about $4.20 or about 18% on the day. It was just a rough day. They posted pretty bad earnings. They missed their earnings by about 17% this morning. At the same time, they announced the SEC is investigating them for apparently they have some shady contracts with financial analysts. Yet again, going to our point of do not trust financial analysts. But the combination of those made for a pretty nasty 1-2 punch to the stock today. And of course, we saw commensurate activity in the options volume lighting up the tape. We usually see about 3,000 contracts a day in Avon. We saw over 10 times that today, about 37,000 contracts lighting up the tape. What was interesting about this, though, is that it wasn't what you might expect, which is in a day like today, a lot of very near-term bullish plays coming into spec on the immediate retracement or the immediate downturn in the stock, but actually the opposite. We saw some very sizable long-term bullish plays coming into Avon, or sizable at least for this name, which really doesn't have much in the way of sizable volume going on in it today. We saw this morning opening up about 6,000 of the January 13 20 calls. So not Jan 2012, Jan 2013. So longer term calls being scooped up, with about the bulk of those contracts being lifting offers somewhere in the, looks like about the $2 to $2.20 range. I don't have the exact prices here where they went up. But a lot of, it looks like about $2.20, so that looks like the bulk of them went up for that price. So people scooping up long-term calls on Avon thinking that this retracement is overdone, or that this downturn is overdone, that perhaps the SEC investigation will obviously turn out a little more favorably than expected. We also saw about 10,000 of the Jan 2012, so much nearer term, 22 half calls going up. The bulk of those appear to be buys as well. So a lot of bulls coming into Avon given today's movement. Let's see, the last time shares were dipped this low was back earlier in the month, and since have bounced to about as high as 24. So it's been a decent, about 6-handle range over the past month in this name. And it looks like people, for the most part, are thinking that maybe this SEC investigation and the downturn due to the earnings this morning may be overblown, and they're betting substantially to the upside that Avon's going to pull back in the longer term. It looks like about 17,000 contracts overall, which is about 6 times this name's ADV going up on these names. Of course, looking here, the Jan 22 half strike has about 10,000 open interest on that, so that might be closing. We'll have to dig in a little more and see exactly what those strikes, what that activity entailed. But if you look at the Jan 2013s here, there's only 300 open interest on that strike, so that is all opening paper on the long term here for the Jan 2013s. So a lot of interesting long-term paper going up, long-term bulls in Avon. And before I move on, any of you guys play at all in Avon or have any comments or interest in Avon?
That gap down would scare me.
Yeah, that's why we kind of highlighted this one. You'd think that with a name like this, you'd see a predominant near-term put activity, buying of puts, selling of calls, that sort of thing. A lot of near-term bearish activity, and we saw actually a lot of the opposite, which is kind of interesting. So a lot interesting people looking. Obviously, there were some players in the puts as well. About 3,000 Nov 18 puts went up today and across the board. So there were some bears as well. I don't want to make it sound like it was all people loading up on upside calls, but it was more than you'd expect on a day like today of people thinking that the sell-off in Avon is overdone. So we'll keep an eye on AVP here and see if these long-term players have the right end of the trade here. Next up on the odd block is Magic Investment Corp, or MG, I should say. Magic's probably their abbreviation. It's MGIC Investment Corp, and their ticker symbol is MTG. This is an odd block special, a small name, trading about $2.72 today. They're up about 15% or 35 cents on the day today. This is a name that does about 6,000 contracts a day. They did nearly 100,000 today. And this actually is following the theme of the Avon, in that we saw long-term call buyers lighting up the tape today in MTG as well. Again, players in the Jan 2013 calls. This time we saw the Jan 2013 10 calls. So this guy is really optimistic. He picked up 83,000, almost 82,500 of the Jan 13 10 calls for 45 cents. So this guy is a serious bull here on MTG. He wants the stock to more than triple over the coming year and a quarter or so, and he needs the stock to rally obviously to 1045 for these calls to even start looking good. So, and he bought 83,000. That is a substantial amount. That's about, you're talking 15 times the ADV in this name. And given that this strike has about 31,000 contracts of open interest. So there is some substantial open interest on this strike. So this could be a continuation of trades that this person has been legging into for a while. This has a long delta as around 30, so this carries the equivalence of picking up about 2.5 million shares of the underlying right here. So this is obviously could also be a spec on picking up some equivalent underlying, but this guy is picking up lottery tickets at this point here, thinking the stock's going to triple in value. I'm not sure. You guys probably don't follow MTG on a regular basis, but this definitely falls into the category of picking up some lottery tickets and hoping for the best here.
Yeah, why didn't the guy buy like the 5-10 call spread or something? I mean, he's got so much. He has every force in nature going against him by just buying the flat out 10s.
Exactly.
MTG creeps up, they're going to crush the volatility on him. I mean, I don't know. Maybe he hasn't gone to a decent option school, but it looks like he's sort of reaching for the most expensive call on the board there.
It seems like it, and that really outlines a continuing narrative we like to discuss and bring up whenever possible here on the Odd Block, that the size money is usually not exactly the savvy money when you're talking about options. And this is a guy who probably took a quick options course, saw that you can buy some calls and get some leverage, and decided to do make the mistake that many retail traders do, which is just pick up the far out of the money lottery ticket options and hope for the best. When you're right, he could have structured this in many other ways that are far more attractive, done a vertical spread, maybe do it on a ratio. There's a lot of different ways you could have put on a similar, much more attractive position from a fundamental and from a Greek's perspective with a similar outlay and premium and have a much better underlying fundamental position than this. So we like to highlight these every now and then whenever possible, just to show that just because it's size money does not mean that it is the smart money.
Nicely said, Mark.
Well, I have been doing this a little bit for a little while, so I have learned a trick or two in my day. And we're going to close it out here in the old Odd Block with another first-timer here, Hecla Mining Company, ticker symbol HL. They closed at $6.30, up about 50 cents or 8% on the day. This is the name that's doing about 11,000 contracts a day. They did about 52,000 today, so they were lighting up the old tape today. And what we saw, actually, looks like more bullish call buyers for the most part today. In Hecla, we saw about 23,000, a total of 25,000 on the day, actually, of the December 6 calls being gobbled up for an average price of about 63 cents a piece. So these are now in the money calls, contrasting to what we saw a minute ago with this person diving into the lottery tickets in MTG. And it looks like this guy thinking that Hecla has a little more upside to go, a little more room to the upside, maybe looking to pick up some gamma to scalp back and forth here. But some nearer term at the money purchases here of calls in Hecla. Hecla has been trading around quite a bit. The last time it traded above that break-even level, that 663 level, was back in late September, so it's not exactly a far-flung bet that this guy is making that the stock could rally to the north. And in the meantime, he's got a lot of gamma here that he could scalp back and forth if he is indeed on the savvier end of the spectrum to make this play even more attractive. But even if he sits on it and lets it decay, he can still perhaps make a decent amount on this if the stock continues its trend to the north. So any of you guys watch the mining sector at all?
No, no, not at all.
I'm watching it a little bit here because we're in the miners for a while. Newmont, Randgold, Royal Gold. Yamana Gold, those are kind of some of your better quality ones. And so, they'll move if gold will move. And if gold in the market's doing well, they'll all both do pretty well. The problem is if the markets turn on you, then you got to contend with the price of gold and what the market's doing. So you may get really hit hard, and which is kind of what recently happened to the miners. I think, the market turned down, gold turned down, and now it looks like they're trying to come back a little bit. If you look at the volume 2 days ago in gold, looks like it had it's trying to come off its bottom, and a little bit of a follow through. Volume came in a little last 2 days, but so looking at some of those miners might be okay at this point. With again, we're talking about the printing coming out of Europe, so should do well for gold. And if we got a market going up, because this quantitative easing might inflate everything, the miners might do as well. So you should keep an eye on those.
Yeah, this guy here could be making a spec that the metals have more upside to them again, and that the doldrums of the metals are behind them now, and they're going to look straight up again like they have over the past few months, in which case this play would also look fairly strong. He's got a few months for it to play out for him here, so an interesting play here in good old Hecla. And that's going to do it for the old odd block today, and now we're going to roll right into the Express block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express Block. This is, of course, the portion of the show where Tim Navabi takes the reins and I get to rest my tired vocal cords. So, Mr. T-Nav, what was going on behind the curtain, behind the scenes today in the land of Options Express that may interest our listeners?
A day like today, I had that NSYNC song, Bye, 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 just constantly going through my head.
Oh, God. Do not bring up NSYNC on this show, sir. That is a foul of the highest order.
I was wishing Mark was here because I thought maybe he would enjoy that one. But
yeah, he would start singing it right about now. So, Andrew, if you want to fill that role, you have to start singing all the horrible pop music.
I was actually just going to start to hum there for a second, but I honestly could not remember the words to Bye, Bye, Bye from NSYNC.
Yeah, me neither. It's just the bye, bye, bye is all I know. And I'm going to ask some questions of Andrew in a minute here. But, it was just bye, people getting long and, saying goodbye to, the put holders, people holding on to their SPY, 110, 115 puts. They were just, they were sad. They were very sad people. So, kind of like I said before that, the sellers were exhausted, I think. So they kind of just haven't been around. So it wasn't that people were, were really covering shorts or anything like that. These were mostly people just, holding on to puts. And, we kind of said goodbye to them today. And then, a couple other things that I saw on the desk today that happens on a day like today. People will want. It's a question I get a lot. Maybe I talked about it before, where someone says, look, I'm going to go buy this Leap and I'm just going to sell the front month option. And the question always comes and the situation always comes up when they say, hey, when my front month option is about to expire or does expire and the stock is, and the option is in the money, what do I do? Are you going to use my long Leap? The answer is no. We're not going to use the long Leap. What's going to happen is you're going to be short stock on Monday. And, people don't really understand what to do. So
these are people, these are people who are using the Leap as a covered call kind of a swap out trade? Okay. Yeah, that's an interesting trade. We recommend it a lot, but I think people who are maybe a little newer to the covered call scene and swapping the Leaps in for them may not understand exactly how that all plays out. So that's probably a good one to walk our listeners through, Mr. T-Nub.
Mm-hmm. Yeah. And it happens too, where someone says, gee, I really like this stock, or I can't afford the stock, but I want to sell a call on it, and I'll kind of mention that there is this strategy that they can just, use a Leap for the stock. But again, it's the question of, the option expires, the stock is in the money, it's Monday morning, and now they, show that their account is short 100 shares. And in general, they kind of panic, and there really is no need to panic. They're holding on to that long-term leap, that January option. That's kind of why we let them do it in the first place, and why they have the short stock. But they're generally just not comfortable on Monday with the short stock position. Now, they were out to trade options. Now they got stock in their account. Their account can't hold that stock. So they really feel uncomfortable. And I tell them all the time, and I was saying this a lot today, don't have that option on Friday. Get out. If you don't want the position anymore, sell that January, buy back that front month. You can do it on one order. If it's a 1 lot, 2 lot, you're saving commissions.
Or they could just roll the front month if they want to keep the long term on as the stock and keep that essentially that covered call portfolio going. Just keep rolling the front month. You don't have to worry about
exactly
the all the downsides of having that underlying coming in and gumming up the works and taking up all your margin and all that other fun stuff that goes along with it.
You're exactly right, and that's what I really try to tell them to do. And I'll say, if this was your plan, you need to be buying that front month back and then selling the next month out, and do it today on Friday. Don't wait for Monday to do it. The problem comes when they say, well, they see that loss that they're going to be taking possibly on that front month. And I think that's where, they don't really understand that, look, if you buy this back alone, you're going to be taking the loss. If you're, going to wait till Monday, you're going to have short stock and you're going to have that whole mess. But by consistently selling that front month, and sometimes you can do this even on the weeklies, you're going to, come out ahead. I mean, the financing will happen. Selling that, front month option and rolling it all the time will help, finance that leap.
Yeah,
I see that a lot today.
I'm glad you brought that up because, like I said, this is one of the strategies we recommend when people ask us about covered calls and that sort of thing, where we typically couch it as almost a level 2 covered call strategy because most people are familiar with owning the underlying and then writing the front month call against it. And the leap versus short-term call has a number of advantages. It's much better positioned from a delta perspective. It participates on the upside. It reduces your downside a little bit. It definitely, from an outlay perspective, is much more attractive. You get much more leverage on it, but it does have, you're right, this commensurate extra level of complexity that some people who are used to just writing calls and they get assigned, the stock goes away, it's pretty straightforward. That extra layer of, you can call it hassle or maintenance, scares some of them off, even though it is definitely usually recommended to use a leap as opposed to the underlying whenever possible for a wide variety of reasons. If you're looking, I encourage you, if you want to learn more about using leaps in covered call strategies, check out the Options Insider. Options Express has a number of great educational articles on that, I'm sure, as well. So there's a lot of places you can find that. Just search for covered call and leap, and you'll find quite a bit. But it is a great strategy. But you're right. When this time comes around to the month, people like Tim are going to get a lot of calls about what do I do with that short leg.
Andrew, what do you? What would you? How could you add to this conversation?
Oh, as far as rolling the leap versus a short call?
Mm-hmm.
Well, the only thing is now, on my understanding, I want to make sure right is owning owning the leap. Let's say 1-2 years out, and then writing calls against it.
That's correct.
Okay. So one thing you also get, so when the market is this volatile, you also get the benefit of having the volatility coming up and adding to the value of the leap a little bit.
Mm-hmm.
So you can participate. So even if the market's crapping out, you have the chance for the call, for at least your deep option to participate. So you almost have like a double whammy where the call you've written against, if the market's going away, there's that short delta, plus you have the Vega component. So it might help you a little bit. As far as won't feel so bad. Another thing I look at is, I'm still old-fashioned, is when you actually sell that call. Being a little patient. If front month volatility is too cheap, you wait. And by owning the leap, you do. That's like having by owning the leap, you're not short that synthetic put that you do when you own the stock. So you have I think you have a little bit more time to be picky as far as what you want to write against that. So, I wait till you actually see some some decent volatility, maybe 2 months out away from the strike. So I haven't dealt with too many retail traders with the exercise. I'm a little more comfortable with having a short call assigned to me. Let's just say I'm used to that.
Sure.
But
you're old school, sir.
I'm old school as an old floor trader. But I think that is a nice way for people to do it. But also, I think maybe being also a little selective on when you sell the call. Like obviously, the last 3 months or so, selling a call in December against a leap, or really riding the advantage you get in volatility would have been great. And just noticing here weeklies, that might actually be too much gamma in a weekly.
Mm-hmm.
And you see that the kind of the flip side is, if let's say you're selling weeklies, because the market's so volatile, that might be the wrong contract to sell against the leap.
Yeah, that's kind of when you mentioned patience, that immediately brings to mind the weeklies for me, because weeklies have almost been the death of patience and selectivity for the typical call writer, because they want to dive into that they like front month. They see the weeklies, they get enticed into writing the weekly, so they literally have to roll that position and do a new position every week, so they're much less selective. They feel like they have to just get that initial sale in as soon as the weeklies are listed, and then take it again next week and the week after that. So that what we've seen, if anything, is that the weeklies have made people less selective and less patient when it comes to the writing end of the spectrum. And you're right, I don't think weeklies are appropriate for a large number of covered call writers. It's a different beast entirely, and yet we see so many of them flocking into those contracts to do leaps versus short weeklies and a number of other things that maybe are not right for the given scenario and for the given environment for those traders.
Right. Mm-hmm. You're not kind of matching an apple with an apple and an orange with an orange. So the natural tendency of the leap contract is it's a heavy Vega contract. Even when it's in the money, there's still a Vega component. So maybe selling a call that's 3 months out when you have this volatility and just sort of, okay, I like this trade, and you just live with it for a while. Then you don't have that problem with exercise. But as soon as you start riding those weeklies, you're asking for a little bit more trouble, because of that gamma component, and its expiration every week, So it might look fun, but it might become a big pain in the behind, I guess, as Mark was alluding to.
What would guys like Tim do if there were no weeklies to generate a constant influx of phone calls?
Exactly.
Tim, you'd be bored out of your skin.
I know exactly what you're saying. And from personal experience, you are absolutely correct. I mean, I thought that this would be a nice, attractive trade on something like Ford, and I just got sick of selling the weeklies, and for all the reasons that you're talking about. So, I get to tell customers about that experience, and they always ask me, and I say, hey, go ahead and do it and try it, but you're going to get sick of it. So.
And George, I know there wasn't a lot for you to touch on here in the Express block, but don't worry, we'll bring you back in the Around the Block, and you can dive into all the fun macro stuff there, sir.
Not a problem. I'm enjoying just sitting here listening to you guys. It's great.
All right, that's going to do it for the old Express block, and now we're going to dive right into Around the Block.
Around the Block.
And welcome to Around the Block. This is, of course, the portion of the show where we discuss what's coming up, what we're watching on our collective trading screens for the next few sessions going into the weekend. And just a quick update here as we're going into Around the Block that the Baidu earnings did just come out. Baidu closed at about 138 today, and in the after hours they're hovering right around 150 right now. So looks like the news was fairly good on Baidu, and if you've been trading this one's been all across the board lately. Just about 2 months ago it was trading about nearly 100 even. It's since up about 50% almost exactly since that point. So it's just quite the ride for Baidu. It's back up to where it was trading in early September now in this 150 range. I know, Tim, you get a lot of calls and a lot of playing over at OX and Baidu. Is that the case today as well? Lots
of Baidu. Everyone wants to do Baidu. I mean, all the big ones. We had a lot of Amazon people. We had a lot of Priceline people. So this was I mean, it was a very good learning earnings season.
Yeah, it was. You mentioned Amazon, you mentioned Netflix. Both of those had their earnings come out, and not exactly lighting up the tape on either of them, really. But Netflix, of course, just continued to create widows and orphans left and right. Is trading the 80 handle right now, closed at about nearly $81 today. Just unbelievable what's going on in that name. Amazon as well, even though these are both post earnings, you still see relatively hefty levels of premium in both of these names. People are obviously expecting some more moves, and people are still scooping up vol and picking up vol out here in these names. Amazon has had a bit of a vacillation as well. Closed today at about 207, was trading as high as about nearly 240 going into the earnings. So Amazon not exactly lighting up the tape either. Of course, a lot of that was them incurring costs for diving into the hardware game, and we all know hardware usually takes a substantial initial outlay. A lot of rumors, too, that they're taking a hit on each Kindle that they make in order to get it out there, that attractive $299, or was it $199? I forgot. $199 price point. Isn't it $200 for the Kindle Fire?
For the Fire, yeah, $199.
So yeah, they're probably taking a hit on that in order to spread the word and get the name out and get some units out there. And they say the response has been pretty strong. They have a substantial number of more pre-orders than they imagined. But of course, Wall Street wants to know, what are you going to do for me right now? What are you going to do for me tomorrow? So they took a beating on the name there. Vol, even post earnings, and Netflix as well, commensurately up. Ford also looking a little bit. We talked about Ford earlier. Ford's a name we've been playing in and out of quite a bit. We were trading it when it was down about 9.5 or so, and we picked it up there, and we scooped around with a lot of short premium trades there. Picked up some underlying, flipped them out there with some in-the-money covered calls, because quite frankly, I'm one of these people who is not exactly buying this rally, so I took whatever pop I could to unload most of my underlying here in Ford. Still have some underlying left over, and took advantage of some of the pops here as well to protect that with some ratio put spreads to the downside. So I'm actually net long units here. I
got a name. Sorry for that.
Go ahead. What's the name, Tim?
That's around the office a little bit. MF Global.
Oh yeah.
MF. Anyone?
MF. Huh?
Going out of business.
We all used to work for them formerly at one time. So it's kind of interesting story behind them, because they were actually getting rid of all their kind of brokerage and retail, because they wanted to be this big investment bank. So I guess plans didn't work out. So interesting story there.
Yeah, I saw that's like a 300 vol spike to a couple 200 or something. Looks like they're about to go bankrupt because of European exposure. And the stock was still down today. You would think with the European news getting slightly better, they would lift some of the weight off here, but nothing. So it looks like it's priced to leave listing, as it were, and go the way of the dodo, unfortunately.
If you haven't been watching MF, it was trading about the 4 handle closed today around 1.5, down another 16% today to about 143. Saw a lot of activity, nearly 20,000 contracts in the Nove 1 puts. I'd imagine there's a substantial number of buyers of those, which is, of course, never a good sign for a name, and people are scrambling to pick up the 1 puts. Not exactly.
I think automatically once you say near-term 1 level put, that's pretty much it.
That's the end of the story right there.
The story is not good. When we were going back to Apple and Amazon, one thing that I thought this European, I'm going to call it the European halo, right? So since Europe has this binomial event has popped in and out, it's left a lot of implied volatilities much higher than they were, let's say, 5 months ago. So even after earnings, you kind of have what I think is an opportunity anyway. The news is out, good or bad. Netflix, obviously, all that was horrible. Amazon was not great. So you're left with these stocks that are down, that are now looking like better values, but really, the fact that people are coming in from upside calls and keeping the vol kind of jacked, there's actually some opportunities and like downside puts, being short put spreads that are 20 or 25 bucks out of the money, still have some value. And normally after an earnings, a standard earnings cycle, they just wouldn't have any.
Yeah, that's true. That
might be a little more advanced for people, but it is kind of showing up. I mean, if you're gonna do a buy ride or something like on an Amazon or a Netflix, it's probably less risk than just a small put spread that's around the 60 handle in Netflix.
Yeah, I'd be terrified to short any premium right now in Netflix. I've seen too many people get burned. I've been burned a few times myself, leaving any short downside in the table on Netflix, no matter how far out of the money, thinking this is no way. And of course, it comes into play. They don't call it the Widowmaker for a reason. So yeah, I would not, at this point, I would be terrified to have any short units. Given what those guys have shown, their propensity to do whatever on any given day, this thing could be trading 30 handle in a heartbeat.
So again, a more advanced type of, and very short term, obviously too. But we've been watching that, and actually that's come in, and it's been okay for the last couple of days. So.
And we've discussed that too, how names like Amazon and Apple are starting to really get that, almost you call it the zealot skew, that are starting to get some juice to the upside in names where traditionally these are broadly held equity names. Usually that upside is relatively depressed given all the call selling we see on that skew from all the major funds that hold it and write calls against it every day to generate income. But we're seeing, particularly in Apple, that the zealots are still out there in force, and they want it. Regardless of vol level, regardless of price, they want that upside. And so there are a lot of opportunities to leg into call spreads and ratios and other things like that in these names that are attractive. And I would be far more willing to put on talking about short put spreads, put one of those on in Amazon, because I think you have a lot more substantial room in Amazon, and much less potential for Amazon to gap down to 100, and let's say in Netflix to gap down to 40 or 30.
Right, I guess I'm planning on Netflix running out of gaps. There was the 300 to 200 gap, and there was the 200 to 150 gap, and then the 150 to 100 gap. Okay. I guess law of averages, you run out of gaps eventually. Right?
We just had John Grigas on the show last episode, and he thought that point was at the 150 level because he picked up the he didn't go short thing guy, but he picked up the 165 calls, thinking the gaps are done. It's got to retrace to the upside, and of course it never looked back on those either. So Netflix has just been, like we said, it is the Widowmaker, it is the beast. And George, before we close out the old around the block here, what are you watching on your screens here for the coming few sessions?
Well, let me just make a little comment here quickly on Baidu. Baidu's really interesting because that was pretty much a pretty classic head and shoulders kind of top short setup. But your earnings are coming out, so you better not do that. But it was butting against its 50-day and 200-day. And now with that pop we're seeing in the aftermarket, that holds, that totally changes everything. And actually, again, puts in a pretty good point to the upside for the general market, because you had this kind of like major leader, kind of like Apple, and it looked like it was going to turn over. Same Apple kind of looking the same way, wasn't able to hold that 400 level. Now these guys are turning back up, and again that bodes well for the general market. That's good. You got to look at that, and try not to hold too much anything right in front of earnings seasons, because the results are pretty volatile. Like just last week we got hit. We are owning Polaris, PII. Earnings came out, beat the estimates, guided forward, great story going forward, and then they killed it that day. Of course, that reversed the next 3 days later, and now it's back above it. But, if you had to stop this plane, you could easily get stopped out, Same thing kind of happened with Celgene today. Didn't really take a big hit, but, again, really positive story, beat the street kind of thing. Firing on all cylinders, and the market sort of yawned. I think it was off a point or something like that. So you just got to be really still careful during this kind of volatile kind of earnings season.
Okay, thank you for that, George. And that's going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. I want to thank all of my cohorts here, my partners in crime, for joining me on the show. And starting off with you, George, what is coming up over in the land of KYO that you think would interest our listeners?
Well, we're doing, a little bit of the same old thing. We kind of take turns into like where we're pouring the money in. A lot of it, when we get the markets in a sort of choppy session like we have been, that's where Mike and Mike do all the hedging for a lot of the accounts. And then if we pick up a trend where, it looks like we're starting to pick up on a positive trend, then we'll be shifting some more money into just long equity positions and see if we can ride that for as long as we can.
Ah, the good old long equity. Riding the long equity. What can go wrong with that approach? Right?
Always looking for that trend, The
trend is your friend.
Yeah, this year has been pretty tough because it's just been choppy. Yes. It didn't just start breaking down and continue down. I always wanted to suck you back in and then break you down. So, and that's the kind of year it was, sort of third year of your rally. And so we're hoping, always hoping to see if we can, get another trend. If not, then we'll be doing the option selling that Mike and Mike do.
Hey, this is why you guys at KYO get the big bucks, huh? This is when people can turn to you for guidance in these tumultuous and troubled times.
Yes, we're here to help.
And Andrew, a little birdie, has told me that you have some big announcements coming in the wings, but we'll have to hold off on those for another show because they are a little bit down the road, even though we have been teasing our listeners about something coming down the pike. So since we can't talk about that, let's talk about what's coming up over at Acumen that may interest our listeners.
I think the biggest thing now from Acumen, as far as with our 3D our Excel add-in to the spreadsheet, it's been released. And if you have, let's say, interactive broker accounts or some accounts where you actually have the ability to download data, you can now create this 3D quote space, so then you can start quoting pretty much every stock that you want in the market. So it gives you a pretty broad view of what's going on in the market, and it's a little more accessible to more retail investors. So we've gotten some requests for it, and there's a couple of firms that are interested. So it looks like we'll, again, going at being able to provide this to retail investors in a more accessible fashion. So that's all good news.
Hey, anything you could do to get that topographical view out to more people, I think is a good thing. I love looking at the market from that Acumen city skyline perspective. It's just a different way to look at the market. I like it, and it makes it so easy to just pick out what's lighting up the tape, what's exploding right now. Just find the skyscrapers and then drill down into what's actually going on. It's a pretty
exactly. You don't have to preset or pre-scan for anything. You just watch. You just let the activity, volume, and price movement guide you to what might be happening. So
and listeners, I don't want to tease you too much about what Andrew's upcoming surprise may be, but maybe I can hint a little bit and just say think Slinky. And you'll be thinking in the right camp. I don't want to tease any more than that, lest I get the lawyers angry at me. But and Tim, what is coming up in the land of OX you'd like to let our listeners know about?
I just wanted to say there is a live event on November 5th. It's in Portland. It's a free workshop. I think that'll be nice because I talked to quite a few people out there in the West Coast. And then we also have just a couple of webinars. One of them that's coming up here on October 30th. I almost said August. I don't know why, but kind of like what Andrew was saying earlier. It's this one's titled Option Time Frame Selection. So that one looks pretty interesting. That's at 9:30 Eastern Time, and it's a webinar. You can come to Options Express and register for it.
Sounds good, and I do want to remind our listeners that we do have a brand new look up at the Options Insider that all of you should go take a look at. It's particularly interesting to listeners of this program and to the Options Insider radio network because all of our shows are much more fully integrated into the design and layout of the show. Just click on the Listen Now link and you'll see a nice radio overlay pop up with all of our various shows and the cover art, and we're working to add even more functionality to that as we speak, so you can access dedicated pages for each show, and a lot of other fun things are coming down the road for all of our radio listeners. So by all means, surf on over to theoptionsinsider.com and check that out. And that is going to do it for this episode of The Option Block. I want to thank all of you out there for downloading and streaming and subscribing to this show and making it such a success. And we'll see you next week right here on The Option Block.
Become a part of The Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.